Happy Sunday, everybody. Welcome back to TLDR Finance. Today, a bit of a hot topic. I'm going to talk about Bitcoin and price targets because Jesus Christ, if I get one more person asking me, where do I think Bitcoin's going? So here's your answer. The answer, of course, by default, is I don't know. But we're going to add a little bit of analysis to it and see if we can't help you get an answer yourself and work from there. So we're going to start with our TLDR friends. We're going to get our friends, Jesus. So we've got our 6 things we're going to go over today as far as how we might be able to help determine a price target. So we got some technical analysis, which is my favorite. We got the left side here. Fibonacci extensions, one of the few things I know that actually projects potential price movement out into the future. We've got price action, which are the different candlesticks as they move along, kind of what they mean and how we might be able to use that to help us with, are we getting close, are we not? Round numbers, again, technical analysis, pretty simple one there. That one's hard to project anything, but it will tell you some stumbling blocks along the way. Bank analysts, obviously, Citibank, JP Morgan, Guggenheim, they all pay their people incredibly well. And so I would like to think they're right, or they have some great analysis for it, and some of their numbers are mind-blowing. So we'll get into that. And fundamental analysis, again, on investment camp versus market. So just how much money is being poured into Bitcoin is going to simple math of what the coin's going to be worth. Since there's a limited supply, we know what that math is. And so we'll go over a quick example of that. And then finally, HODL, baby. Hold on, don't lift is a classic Bitcoin piece. That's why a lot of people have made a lot of money because they held on since forever. They just don't sell, similar to Tesla investors, I guess. You just buy and hold and don't sell, and that's the plan. I'm going to hold for as long as I can, and maybe I'll take some profits here or there, but for the most part, I'm holding forever. So before we get into the technical analysis for the TLDRs, Fib extensions shows about the same price as the investment market analysis, market cap we're going to do, of about high 40s, low 50s. Technical analysis, there's really no, the price action and the round numbers, there's really no projection. We're just going to talk about why those things matter. Now, the bank analysts are incredible. So Citibank has a range of 75,000 to 250,000 per coin in the near term. I don't know what near term means, but I'd think less than 5 years, right? I don't know. So the article didn't say, but it's in the sources in the description for you to read. JP Morgan says 146,000. If I'm remembering the article right, and then Guggenheim said up to 400,000. So none of my math comes up with any of those, but that might be the little kicker there that we talk about in the market cap piece, the accelerator. I don't know how to calculate that. I don't know if there is a calculation for it, but we'll talk about that. So TLDR, guys, thank you. But ultimately, the projections here are anywhere from 50,000 up to 400,000. Stick around to learn more about why that is. So we're going to start with technical analysis. And we're going to bring up my fancy chart, which, I mean, isn't that chart incredible? So this is Thinkorswim, the charting software I'm using. We're currently looking at Bitcoin futures because that's all Thinkorswim has, but it does the job for what we're looking for. So in case you didn't know, this little shape over here is what's called going parabolic because it just takes off like a rocket ship. Wish every one of my investments did this, but alas. So we're going to use this for technical analysis. So first we're going to start with Fibonacci extensions because I think that's a pretty easy one. So we're going to start with a quick understanding of what they are. Bam. So known as the golden ratio, found everywhere in nature. It's done by adding the previous extensions or previous numbers, excuse me. So 0 and 1 is 1, 1 and 2 is 3, or sorry, and then 1 and 1 is 2, 2 and 3 is 5, etc. And you divide those numbers and you get this 1.68 ratio. So that's where you get it from. There's a lot more about it. We'll go in, maybe not further depth of it, but Great Invest PDPs, this is where I got this from, kind of breaking it down of what it is. It's an extension tool that traders can use to establish profit targets. So it's made for what we're trying to do here. So back to the chart. All right, so I've got a drawing set here. And so there's not a lot of great places to draw this, because in order to draw this, we're going to remove this here real quick and I'll show you how to draw it. So we have to draw from a low to a high and then back to a low. So here is a great example. It's easier to see. We go bam, that's a high, there's the recent low, and then we get this fancy graph here. So as you can see, 100%, which is pretty common, was 28,000. 1618, great golden ratio extension, 34,000. And then we have this 261%, which is another, again, 618, except it's just the further extension of the ratio, 44,000. So I don't like, obviously this one will work. This is saying that our max profit target is 44,000. I don't like it though because it's not even the parabolic piece of the growth that we've had, right? This is definitely a great growth trajectory, but not quite what we're looking for. So ultimately, I think we have to wait a few more days for ideally some sort of little pullback here to get a really good one. But if we go, let's see here, from this low up to, let's say, the high of this candle and the low of this candle. Again, not perfect, not what we're supposed to be doing, but we're forcing it for the video and for time because I don't want to wait another 2 months to put this video out. So if we do that, now we're getting price targets. Oh, good Lord. All right, so 100%, 60K, 1618, 75, and up to 100,000 for the 2618. So we're getting closer in line to where the bank analysts are. I think this is a bit aggressive, but at the same time, I mean, it went from 18K in December to 40K, or high of 42. So crazier things have happened, but that is something to use to help you out there. Next, technical analysis of price action. So made a couple of bubbles here, and so what I want to do here is just show you, oh, no, some price action that'll help you as price is approaching a certain level, things to look for to help you maybe like, oh, this might be it, or nope, I thought this was going to be it because this is a very even number, but everything is momentum is carrying it, so we'll be fine. So first is the round numbers. Anytime there is a round number for technical analysis, stocks tend to tumble, or just stumble, not tumble. So at 9,000, we had a little bit of a stumbling block here. We had a couple of high tests testing it, but then ultimately fell down and came back up to explode through it. So now this 9,000 level becomes support. As we see, we have an up bar, a down that stops before 9,000, another bar stops before 9,000, and then continues up from there. Up here again, we have 13,000. Seems to be an even number that it's struggling to get through as it stumbles through, falls back down. Now it's not, as you notice, it's not every even number here. 10,000 doesn't seem to really care too much. However, there is some support. All these bars here are struggling or resisting dropping further until eventually it does. 12,000 seems to be a stumbling block here as well. So just pointing that out, round numbers, especially big, the bigger the chunks in that, so 25,000 is a big one, 50,000, 100,000, those are bigger than just like a 10,000 or 11,000, but those do still matter and cause a little bit of stumbling. Not a good price projection, but if we're at that level and you're like, I don't know, where should I get out, should I not, and we're getting close to 50K, it probably is going to stumble a little bit. That might panic you. So if you got out at say 50K, or as it stumbles or kind of like maybe test through it a little bit, um, just for your own sanity, and then maybe you get out and wait to see what happens. Not a bad play. You of course could miss. It could spike up like it did here and blow through 50K, or of course it could hit 11 and then drop back down to 8, and you might be really sad. So some things to use. Next is price actions. The actual candles and their order of how they appear help with momentum and how it's it can help you with direction. Is it going to continue on, or is it starting to peter out and may not have much juice left in the tank? So here's a great example. We've got 3 green bars in a row, but more importantly, the green bars are larger. So the price movement of the day are larger. So if we blow this up here, that looks terrible. So we started at 90.12, end of the day 92.22. So 200 points up, but then the next day 93.15. Now we're 300 points up on this next bar. So that's momentum, growing momentum. The snowball rolling downhill is getting larger and larger. The next day 350, 400 points, and then boom, explosion of, what is that, 1,000 points? Gap up, which is anytime there's a gap, huge momentum. Bit of a stumbling block on the red because of course it opened and closed at the same similar price with very minimal movement, even though you had this wide swing. Again, another green bar, momentum just continues, and then boom, huge 2,000 point bar. Again, momentum. So if you're seeing this, if you're here and you think, should I buy, should I not, or you already hold it, like, I don't know, should I get out, should I not? If you're looking for 3 green bars and they're all going up, this would not be an ideal time to sell. Momentum's carrying you. They're all green. Everybody's buying. Everybody's on the bandwagon. Like, yeah, let's do it. Let's go. So good news for you. And I know I'm blowing over a lot of stuff about price action. We'll have to do another video of it because this is my favorite way to trade, especially on shorter time frames. But we'll get into it. All the rest of these circles are just other price actions that we have. So in this case, we had a bunch of low test candles. These little wicks are showing that the price tried to go down, but ultimately where the bottom of the bar closed, it held right at 1067. So you did that 3 days in a row, 4 days in a row, it's probably going to go up. Probability is on your side. Let's say that. Probability is on your side that it's going to go this direction, upwards, instead of this direction. So a lot more examples there. What do we have over here? So we see these are more recent ones. So here's a good one for it. Even though they're red bars, still technically bullish because they're getting smaller and smaller. So we had, a little bit of an up and then kind of a sideways here. But then ultimately we start to fall, but they're very small movements. And they don't break the previous low of this red candle. So this was the attempt. Not quite. Bulls came, the buyers came back in, bought some more, held on. You'd think the sellers are winning because the bars are red. However, the bar is not dropped below this previous low. So the buyers ultimately have control. And then the next bar being a tiny little green one, but that's a gap up. The gap up is big. We have another little green bar, so another little win for the bulls. And then all of a sudden the bears are tired. So they say, yep, we give up. Boom, big green bar, big green bar. Maybe we're a little tired. Bulls are getting a little tired. Bears are like, yeah, maybe we got them. Little red bar, tiny bunch of fights, consolidation. Think of it as a spring. They're both like, and then finally somebody's going to get tired and give up. Bam. Big green, big move. And then, of course, we know what happened next. But finally here, big green bars that are getting bigger. The moves are getting bigger. So potentially right now we're seeing further momentum. Now this bar here I don't like because it's back to a small price movement, even though it had wild swings. So it'd be kind of a holding pattern here to see what happens next. But ultimately, that's it on price technical analysis, price action. So we're going to flip over, do some fundamental stuff here. All right, back on our slideshow, and we already talked about the banks. So again, the banks, 75K to 400K, kind of obnoxious. You saw our fib extension get there kind of. but maybe that's that acceleration factor. I'm not sure. So this is just some simple math here. So right now, the Bitcoin as of 1/7 when I made this presentation, the market cap was 727 billion dollars, about 18,600,000 Bitcoins in supply. Break those numbers down, you get roughly a price of 38,800, which was roughly the price of the day on the 7th. Bitcoins are constantly mined, so there is a limited supply, but we're not there yet. The final 21 millionth Bitcoin should be completed in 2140, so year 2140. So we got some time, but some Bitcoins are still mined. 438,000 of them were mined in 2020, roughly. But that's decreasing because the algorithm to mine those does get harder, and so it will be less this year. So probably something 380, maybe 400, maybe a little less. So I added that in to the new market supply for 2020. So that's how I got 18,900,000 coins. And then yeah. Oh, and then I added another couple $1 billion. So I added $5 billion because that is what Grayscale did. So Grayscale is a large investment fund that is purposely raising money to buy Bitcoin, and it is it's a great resource for institutional buyers because maybe they can't because of their prospectus go out and buy the actual coin, so they have to buy it through some other fund or medium, so they're buying through Grayscale. Grayscale, I actually read a 10K. I know. I kept my eyes from crossing just long enough to see that they had about 5 billion total come in 2020 to buy Bitcoin for their fund through other investors. 3 billion of it came in the first 9 months, with 2 billion coming in just the last 3 months. So that acceleration factor, there's that. But anyway, so I just did some math. If we had $5 billion come in, and we added that to the current, so it was just Grayscale, you divide by the additional supply of coins, you're getting that 38,300. But of course, Grayscale is not the only firm. Plenty of firms out there spending. In my previous video, we had the MicroStrategies. They're not even a Bitcoin investment firm. They're a cloud services firm, and they bought over $1 billion worth of coin. So what if 20 firms did this? Now we have a price of 43,800, excuse me. But what if it's more than 5 billion? What if it's 10 billion? So now we're at 49,000 a year sometime in 2021. And then lastly, the market cap here. So this is a bit of that acceleration factor, trying to guess at what it is because I'm not into the crazy math. Maybe somebody can collab with me to do some math on this, but roughly over the last 3-4 years, we've increased the market cap of Bitcoin by about $200 billion. So that puts this piece in line here with 10 million each, 20 firms. But again, there's a lot more than 20 firms. I think the acceleration could be the real dark horse here, in the sense of it could, instead of 200 billion this year, it could be 400 billion. And that could really help to take Bitcoin off in the projection of the bank analysts of over 100K. So we'll see. But for now, I mean, that's some simple math that kind of helps to justify where the price is currently based on inflows. Now, of course, if it stumbles at all, which it could, and a lot of people are calling for, that money could flee just as quickly. So we'll see. Hopefully we don't have another 2017 where it falls off, which I don't think it would. Otherwise, investment firms wouldn't be institutional firms, and money wouldn't be getting into it if it was still as risky. So we'll see. But we've got a couple of targets here based on our analysis, and hopefully that was helpful. If not, roast me in the comments. Otherwise, like and subscribe, and let me know what you think, and give me some feedback on what you'd like to see next. So until next time, guys, I'm out.